Hey everyone, and welcome to today's Explainer. We're digging into the Raman Investments post-market report for August 5th, 2026. If you're looking to understand exactly what went down in today's session, from where the headline indices landed to the specific sectors driving the action, and most importantly, the technical levels you absolutely need to watch for tomorrow, well, you are in exactly the right place. We're going to take all these complex market movements and break them down into clear, actionable insights using data straight from today's closing bells.
Okay, let's dive into this. Here is our roadmap for today. We'll start with the market overview, check out the market mood and the RBI decision, look at sector performance, hit those crucial nifty technicals, and wrap up with tomorrow's strategy. All right, Section 1, Market Overview and Summary for August 5th.
So, looking at the large cap space today, it was kind of like a tale of two indices. We had fantastic overall stability, sure, but the big benchmarks gave us a mixed finish. The Sensex managed to eke out a slight gain by the closing bell, but the Nifty 50? It finished mostly flat. What this tells us right away is that at the very top of the market, with the absolute biggest heavyweights, there was a bit of a tug of war. Momentum just stalled out a bit, putting the major indices into a consolidation phase.
But man, here is where the energy really picked up today. While those large caps were taking a breather, Reuters data shows the broader market was flexing some serious muscle. Get this, the mid-cap and small-cap indices didn't just have a good day, they actually surged to hit brand new all-time record highs. I mean, that is a massive indicator for us. It literally screams that despite the flat Nifty 50, investor confidence is through the roof. The risk appetite is very much alive, and capital is just flowing aggressively into the broader market where traders are finding growth opportunities.
Moving on to Section 2, Market Mood and that big RBI decision.
The absolute focal point for today's stability was the Reserve Bank of India. The RBI decided to hit the pause button, meaning no change in interest rates. And you know how it goes in the financial markets, right? No news is often good news. By keeping rates steady, the RBI delivered a highly predictable environment. This pause was essentially the anchor for today's session. It stripped away a layer of uncertainty and gave investors the ultimate green light to hold their positions without sweating over any sudden borrowing cost spikes.
Now, what's really interesting about this slide is that the RBI didn't act in a vacuum. According to Reuters, it was part of this powerful four-pillar foundation that just supercharged confidence today. First, obviously, that RBI rate pause. Second, we had falling global crude oil prices. As you know, that is always a massive relief for a major oil importer like India. It helps keep inflation in check and shrinks the import bill. Third, we saw a strengthening rupee. And fourth, a really solid wave of Q1 corporate results. When you mix steady rates, cheaper oil, a strong currency, and great earnings, you get a near-perfect recipe for the stability and mid-cap buying frenzy we saw today.
Let's pivot to Section 3, Sector Performance. Let's see who won and who lagged.
We really saw a stark contrast in the sectors today. On the winning team, we had tremendous strength in reality, auto, IT, and some select financial stocks. Actually, scratch that. It wasn't just strength. These guys were catching aggressive, sustained bids all day long. On the flip side, the laggards dragging their feet were the PSU banks and certain large-cap banking stocks. They showed notable weakness today. But here is the crucial takeaway. Even with the banking sector struggling, overall market breadth stayed highly positive. Those massive gains in reality, auto, and IT more than made up for the banking drag, keeping the broader market sentiment incredibly healthy.
Zooming in even closer on individual names, Upstox data flags some serious momentum today. Larsen & Toubro, L&T, and Indigo were absolute standout performers. Plus, we saw broad-based rallies across a bunch of auto and realty stocks. And the primary catalyst for these wild aggressive price moves? Earnings, for sure. The individual Q1 results from these companies are acting as massive triggers right now. Honestly, if a company delivered strong numbers this quarter, the market rewarded it handsomely today.
All right, down to the nitty-gritty. Section 4, Nifty Technical Levels.
Let's shift gears to the active trading data you're going to need for tomorrow's opening bell. Right now, the Nifty is trading in a super well-defined, really tight range. On the downside, we've got a firm support zone parked right between 24,550 and 24,600. Looking up, there's a heavy resistance zone looming overhead between 24,750 and 24,850. Because the Nifty 50 finished almost flat today, it is hovering dangerously close to these boundaries. It's basically compressing like a coiled spring, just waiting to snap.
So what's the technical logic here? It's simple, but absolutely critical. If the Nifty can muster up the strength to smash through that 24,850 resistance zone and confirm a strong breakout, well, technical indicators suggest we're looking at a further potentially aggressive rise. It basically opens up the skies. But if the market gets weak and drops below that 24,550 support floor, that is an immediate breakdown signal. If that happens, you should absolutely expect to see some serious short-term profit booking as traders scramble to lock in their recent gains. You've got to be ready for either direction.
And while we're talking technicals, it's worth noting who is actually propping the market up right now. According to the Economic Times, today's stability was definitely not an accident. We saw active buying from foreign institutional investors, the FIIs, teamed up with incredibly strong domestic support from the DIIs. When both foreign and domestic institutional money flows in at the exact same time, it creates a massive safety cushion. It's exactly why our support levels held so firmly today, despite the drag from the banking sector.
Finally, Section 5, Strategy and Tomorrow's Watch List.
And this brilliantly illustrates just how many macroeconomic moving parts traders need to track at tomorrow's open. Your watch list can't just be a list of ticker symbols, it has to be a list of macro triggers. You need to monitor any ongoing market reaction to today's RBI policy, you've got to watch the global market opens to get a read on international sentiment, keep a close eye on crude oil and the dollar index, because any ripples there will splash directly into our markets, and obviously stay laser-focused on any big Q1 earnings announcements tomorrow, because we've already seen how aggressively earnings are driving stock-specific action.
Based on the Ramon Investments report, here is your exact actionable game plan depending on how you trade. For you intraday traders, the playbook is to buy on dips when the index dips near that 24,550 support zone and be super quick to take partial profits as we approach the 24,750 resistance. Basically, play the range. Now, for the swing traders, the advice is to hold only high-quality stocks. Don't go chasing junk just because the mid-cap index is hitting new highs. And most importantly, since we're sitting right beneath heavy market resistance, you must use a strict stop loss on all swing positions to protect your capital. Seriously, don't skip that step. So we've covered the macro drivers, we've seen the phenomenal strength in the broader markets, and we know exactly where the battle lines are drawn on the Nifty chart. The market ended today with a really positive vibe, but caution is absolutely warranted as we sit right at the edge of that resistance zone. So I want to leave you with this question to chew on before tomorrow's open. With the Nifty closing right near heavy resistance, is your portfolio actually prepared for a breakout, or are you adequately protected for a sudden pullback tomorrow morning? Thank you so much for joining me for this explainer. Keep those technical levels mapped out, stay disciplined with your strategy, and I will see you next time.